Hey everyone, and welcome to today's Explainer. Look, if you're a serious retiree trying to protect your hard-earned wealth right now, you are in exactly the right place. Today, we're cutting through the noise and breaking down the absolute truth about precious metal retirement accounts, and we are doing it using strictly verified 2026 data. There's going to be no fluff here, no marketing spin, just the cold, hard numbers you absolutely need to know before making any moves. Okay, let's dive into this because honestly, this is the question almost no one asks until it's way too late. When you open a gold IRA, you'll notice the marketing materials always focus heavily on the metals themselves. But they kind of gloss right over the ongoing account fees. Over a decade, things like hidden setup charges, annual custodian maintenance, and storage fees can silently just erode your retirement savings. If you aren't paying close attention, what looks like a safe haven can actually turn into a slow leak in your portfolio. So, to help you navigate this, here's our buyer's guide roadmap for today. First, we'll cover the gold IRA fee landscape. Second, we're reviewing monetary gold. Third, a breakdown of real costs. Fourth, comparing top competitors. And finally, the final verdict and next steps. All right, moving right along to Section 1, the gold IRA fee landscape. Let's establish what the baseline costs actually look like. Because to truly understand if a specific company is giving you a fair deal, we really have to know what average looks like across the industry. Using verified 2026 data comparing 10-year core costs across the major providers, we can see that the true floor for most accounts is easily over $2,000. When you factor in the initial setup fee, the annual custodian fee, and that yearly storage fee over a 10-year holding period, a premium company like Augusta Precious Metals sits between $2,050 and $2,550. Meanwhile, Birch Gold Group can range anywhere from $2,550 up to $4,650, mostly depending on your specific custodial arrangement. Keep in mind, these are fixed recurring costs that you're going to pay regardless of what the actual market price of gold does. And here is exactly where investors get hurt. It's what I call the minimum investment trap. Let's say you just want to start small, test the waters with a $5,000 account. Well, if a company charges you a standard $355 in first-year fees, which, by the way, is incredibly common in this industry, that represents a punishing 7.1% loss right out of the gate. I mean, your metals would have to appreciate by over 7% in year one just for you to break even on those fees. This just goes to show that the structure of the fee matters immensely depending on your specific account size. Okay, Section 2, Reviewing Monetary Golds. Let's take an objective look at what they bring to the table. Now, what's really interesting about this slide is their business model. Founded back in 2000, Monetary Gold operates as a direct dealer. Unlike typical brokers who source their metals from third parties and then just slap a hefty markup on top, essentially taxing you just for making an introduction, a direct dealer buys straight from the refiners and the mints. By cutting out that middleman entirely, Monetary Gold is able to pass those pricing savings directly to your bottom line as a retiree. It's basically a structural efficiency that directly benefits your portfolio. So let's take a completely objective look at what they offer. On the positive side, they have highly accessible minimums. We're talking just $5,000 to $10,000 to get started. Even better, they offer a promotion where up to 5 years of custodial fees can be completely waived for qualified clients. However, to be completely fair here, there are some drawbacks. Like a lot of companies in this industry, their live pricing is not listed online. You actually have to do a consultation to get the exact numbers. Additionally, they do have a smaller brand footprint compared to some of the really massive premium competitors out there. But despite that smaller footprint, I gotta say, their reputation is rock solid. Consumer reporting agencies have verified their track record pretty thoroughly. They hold a pristine A+ rating with the Better Business Bureau, a 4.9 out of 5 on Consumer Affairs based on over 200 reviews, and a perfect 5-star rating on TrustLink. The customer feedback really highlights a consistent theme. They take what can be a very intimidating process and make it highly educational and just super easy to navigate. Let's move on to Section 3, Breakdown of Real Costs. So if you're a pre-retiree looking to protect your wealth, how does the math actually stack up with them? Well, Monetary Gold offers a highly predictable cost structure. Step 1, there's a zero account setup fee. Step 2 is where they really shine, offering a flat $180 annual fee. Crucially, this $180 covers both the custodian administration and the highly secure storage at the Delaware Depository. It's an all-in flat rate. And step 3, like we mentioned, qualified accounts can have up to the first 5 years of these fees completely waived. And this brilliantly illustrates why that matters. The math on a flat $180 fee is incredibly powerful for your growth. If you have a smaller $10,000 account, that $180 represents 1.8% of your portfolio. But look at what happens as your rollover account size grows. At $50,000, that exact same fee drops to just 0.36% of your account. By the time you reach $100,000, the fee is a mathematically negligible 0.18%. Because they don't charge you a percentage of your total assets, you literally aren't penalized for your own success. All right, Section 4, comparing top competitors. Let's do a quick head-to-head. When you compare Monetary Gold directly with an industry giant like Augusta Precious Metals, the differences in their strategy become super clear. Augusta requires a fairly hefty $50,000 minimum investment. They're built around a premium, education-first model and focus exclusively on gold and silver. Monetary Gold, on the other hand, is highly accessible with just a $5,000 minimum. They utilize that direct dealer model we discussed earlier to keep pricing really competitive, and uniquely, they also offer platinum options for your IRA, which gives you much broader diversification choices. Which brings us to Section 5, Final Verdict and Next Steps. So the crucial point is, there is no single best company in a vacuum. The right choice depends entirely on your specific investor profile, your goals, and your account size. You should strongly consider rolling over your 401k or IRA with Monetary Gold if you are a cost-conscious investor who actively wants to avoid middleman markups. They're absolutely perfect for retirees wanting to start with a modest $5,000 to $10,000. They're also excellent if you want flexibility, since they allow you to choose between 4 different IRS-approved custodians. And finally, if adding platinum to your precious metals portfolio is a priority, they're for sure the right call. Now, if any of that sounds like you, or honestly, if you just want to arm yourself with a bit more knowledge before making a big decision, I have something for you. Go check the description below this explainer right now and click the link to claim your 100% free Gold IRA guide. It is packed with exactly the kind of transparent, educational information we've been covering today, and it's an absolute must-read for any serious retiree looking to secure their wealth. I want to leave you with this final thought today. As we move deeper into 2026, is your retirement properly diversified against both inflation and those hidden account fees we talked about today? If you aren't 100% sure, please don't wait to find out the hard way. Grab that free guide in the description below, keep learning, and take absolute control of your financial future. Thanks so much for joining me for this explainer, and I'll see you on the next one.